Yes, guys and girls, welcome back to another BMO video. It is Tuesday, the 14th of April. Now, let's have a little look at the calendar and see what we've got. I mean, as you know, it's mostly about the war still, and it's not really changed, to be fair to you, in terms of what people are focused on. But obviously, what we did see over the weekend was a little bit of escalation in regards to the US blockage. And then we've started to see some de-escalation again on regards to maybe there's some more peace talks continuing. So obviously what we've seen with the dollar, as you can see, is we have continued to come in lower. So we did come into sort of last week with sort of a bearish bias on the dollar. Over the weekend, something happened. So I was thinking maybe something, maybe we'll go slightly stronger, the dollar. We ever so slightly went stronger. And then we saw some more developments on the peace talk scenario. And then the dollar came back in lower again. So like we know, the dollar will probably stay, on the weaker side. Where is it going to come to? That is the main question. I'd say where we're at now, about 1850 to 1900 is probably where it's going to be at. To be fair to you, though, we have not nearly pushed all of the Iran leg when it all first kicked off, which is this big bullish candle here when the markets reacted to the war first happening. So we basically nearly retraced all of that move. Now, I don't see... you have to think of what the reasons are going to be for the dollar to sort of go back up again. And if they're not there, then it's unlikely you are going to be more long the dollar, shall we say? And I would agree with that right now. So I think the dollar probably has a bit more room to run to the downside. Now, calendar-wise, let me just go to this week. There we go. Yesterday, as you can see, was pretty quiet. Markets was a little bit reacting to that sort of slight escalation news over the weekend. It was a little bit annoying, but we saw a tiny bit of stronger dollar, which was sort of this move here. Sort of, where is it? Yeah, this little gap up. And then we saw a little bit more positive developments occurring, and then sort of the dollar came back lower again. So I think you still got to do that, where you have to just monitor the live updates in regards to the peace talks. They are continuing. We're not seeing any friction. Then obviously the dollar will probably remain a bit on the weaker side. Today we have, let's see. We had core PPI. We did come in substantially, actually. We stayed the same than where we were previously. So producers didn't really see too much inflation. It was forecast to go about 1.1%. So that's somewhat of a decent sign for downside in the dollar, which again, I'm recording slightly after it came out, so we have seen more weaker dollar anyway. Then Lagarde is speaking at 3. Where is she speaking? That's important. Interview conducted by Bloomberg. Okay, so she might get asked about what she sees about the war and the inflation, etc. We have a lot of FOMC members this evening, so please watch them very carefully. These ones over here. Lagarde is speaking again. Okay, so she might... It's one of those ones where we just have to see if she does say anything or not. But Wednesday, what do we have here? Nothing really in the morning. BOE speaking. I'm assuming that's in the US somewhere. Yeah, DC. So it seems like a lot of speakers are at DC right now. So therefore, we just want to see if they do say anything of interest. Then Thursday, we have employment change. Remember, that's difference between part-time and full-time. So ideally, you want more full-time than part-time people. Unemployment rate is expected to stay the same. Then GDP month over month. Remember, we want to look at the quarterly figure. So just look at the last 3 months, get the average of that, and see if that's done pretty well. Services inflation, services is also important to look at. Sorry, this one here. Then unemployment claims from the US, not really a market driver right now, still within normal figures. Another FOMC member and an MPC member as well. Some RBA members and German as well. So I believe they're all in DC, I'd assume. Yeah, all in DC. So we're just going to have to see. Then Friday, as you can see, is pretty quiet on the data front. We don't really have anything apart from a couple of FOMC, which I assume is in DC. Alabama, okay. So I was wrong there. What about these guys over here? South Carolina. So we have a couple of speakers in other regions. But what we have to be focusing on here is what do they say about, the regards to the, Iran? How is that going to impact their thought process around when they want to cut, for example? So, yeah, apart from that, nothing much else to add on in terms of data. I think there's going to be a little bit of a quicker breakdown today, just because, again, it's mostly only going to be about the US. And then the other ones are just going to be, little updates here and there. So it should be a little bit of a quicker breakdown today. But yeah, all about the US right now. And we've seen some nice positive developments from there. So therefore, and I'll show us this a bit later on, back to de-escalation trades. So that, think about what those de-escalation trades are, like AUD CAD to the upside, AUD USD to the upside, Euro AUD I'm leaving alone, Euro CAD we're going to probably go higher, GCAD, we probably want to go higher. So the ones we were speaking about on Friday are still pretty valid. So no change there in terms of the bias. So it'll be a little bit of a quicker breakdown, but hopefully on Friday we have a little bit more to talk about, whether or not there's more developments, etc. But yeah, apart from that, that is myself on the news. Let's move on to the dollar, the pound, and of course the euro. So the dollar, let's have a little look. I mean, like I said at the start, it's mostly going to be about the war, and data-wise, we haven't got much. We did have PPI today, which basically stayed the same, which is obviously not the best of signs. Let's actually, whilst we're here, let me quickly share. Yeah, this one. We will have a little look at the market pricing for later this year, because that's what we're interested in, and we want to see whether or not we're seeing some shifts. So right now, it's actually kind of stable. So December is there, October is there still, September is there. So right now it's actually relatively stable. I just wanted to double check if that changed post what we've seen as PPI, sorry. Because what we're more so interested in is this bar here, the one rate cut bar increasing. And we just want to double check and see. Yeah, it's kind of stayed the same over the past day and a bit. We obviously have increased since last week. So therefore, what we're more so focused on is whether or not this continues. And we only know if it continues with a little bit of time, of course, whether or not we see more updates regarding the war, any more data regarding inflation, and then people will obviously look at that accordingly. So yeah, for now, it's relatively stable. I don't think we have any major data that could change that anytime soon. Next week, we haven't really got anything. The week after next, we do obviously have the FOMC, so that will shift the needle for that potential rate cut this year. It just depends on what they say in regards to the war. You know, are they worried? Are they not worried? Do they still see cuts? Do they not still see cuts? People will obviously be looking at their language accordingly. So yeah, until the 29th of April, it's probably going to stay about where we're at now, around 25, possibly 30%, give or take. But around there probably seems about right for this at the moment, because we haven't got anything that could change that. That's the issue. The Fed is the only thing that could come up over the near term. So that's on the 29th of April. So we'll see. But yeah, apart from that, I mean, until then, it's going to be at the war, isn't it? So failed US-Iran talks in Islamabad over the weekend only gave the dollar a brief support. As yesterday went on, oil prices started falling again and the dollar followed. Markets seem to take the view that the Strait of Hormuz blockade is a form of re-escalation, and it could eventually push Iran back to a negotiating table, given the economic costs of lost oil exports. Trump's comment that Iran had reached out to restart talks triggered another round of dollar selling, with the DXY around 0.3% off Friday's close. Obviously, we are down as well further. Markets remained heavily tilted towards a sanguine interpretation of the events. That means plenty of good news is already in the price, which does increase the dollar's rebound potential if tensions flare up again. But it also means that it would probably now take a meaningful re-escalation to stop markets from fading any initial USD bounce like we saw yesterday. So people are what they're saying there is essentially people are going to assess and see whether or not we are going to, like, if, let's say, I don't know, escalation happens right now. What they're basically saying is people are going to look at it and think, is this actually escalation? Or is this kind of like moving the puzzle pieces around and then trying to force out their opponent's hand to say, okay, let's maybe go back to peace talks sort of thing? Or is it actually escalation sort of thing? So that's what they're saying there, that they see probably the market's going to do now. Because, I mean, if you look at what happened yesterday, I mean, we saw the dollar weaken off slightly on the open. Cool, that makes sense. But then people assessed it and think it's not exactly like huge escalation. It's obviously escalation to a certain extent, but it's not to a degree where, you know, it's like, damn, this is actually a pretty crazy sort of thing. It's more so like the US moving pieces around, the puzzle pieces around. So that's what they're basically saying is if we do see any news now going forward, what people are going to probably look at and think, is this actually escalation? Or is this some sort of like, you know, they're trying to move the pieces around to see what happens sort of thing. So it seems like, yeah, I mean, yesterday is a clear example of that. Some focus remains on any reactions from Beijing. An Iranian oil export blockade is particularly problematic for China, and that could add pressure for a quicker resolution. Clear signs that a permanent ceasefire is coming together could push the DXY below 98. So right now we are at 98 hold. So we're basically right around when the war first kicked off, right? So this is when the markets opened over the week, like on sort of that Sunday open when we saw it all first kick off over that weekend. And then obviously it's continued. And now we're basically back to those pre-levels. I don't know if we're going to like substantially weaken off on the dollar until, like what they said there, we see a meaningful, solution, right? And that's what we're more so focused on. So permanent ceasefire would obviously be very good news. So naturally you think, okay, probably more sells in the dollar. But until then, I think where we're at now is probably about right, I'd say. Yeah, I'd say it's about right. That might sound counterintuitive as energy prices remain comparatively high, but other central banks have turned more hawkish than the Fed, which justifies USD weakness against the majors. On the data side, we have PPI and obviously both. What is NFIB coming at? Let's see. NFIB small business at 95.8. And then obviously we saw PPI today a lot lower than expectation. So yeah, right now, I would say probably where we're at now is probably a little bit about right, to be fair, because we're right at when the market's kicked off on the first initial reaction. For it to trade below that, you're going to need to see proper, like what they said, a permanent ceasefire. So that move there is going to be driven probably by permanent ceasefire. That's probably what's going to happen if we do see a good news on that front. So right now, I would say we're probably more so just going to stay either consolidating like that until we see something occur. Seems about right, in my opinion. Yeah. Once we see proper de-escalate like ceasefires, then I think, you would probably be able to sell the dollar down to these lows here, these high lows. But until then, you're going to need something of significance. Like what they said, a permanent ceasefire is probably going to be that reasoning. So right now, yeah, I'd say where we're at now is pretty adequate. Apart from that, I mean, I've got nothing much else to add on. I mean, we're going to have a little look at the other ones as well. We're probably going to go pretty quickly over them, just because the thought process is still the same since Friday, really. Obviously, over the weekend, I was like, okay, this is going to maybe for a little bit of spanners in the works. But it doesn't seem like markets have jumped on board that. Just it seems like the US has moved the puzzle pieces around to force out some sort of more talks from Iran. So that's fair enough. So therefore, it's more so of what we spoke about on Friday's breakdown, where more de-escalation is good for the dollar, it's good for like the AUD, it's good for the euro, it's bad for the CAD. And that's what we're more so focused on, aren't we? Right? I mean, probably still goes a bit higher, to be fair to you. What's dollar yen doing right now? Okay, yeah. You can see like the people don't really want to be jumping in the yen though. That's the issue. You can see that we're just still stuck in that range. ES, how is ES done? Out of curiosity. Okay, yeah, that makes a little bit of sense. Bit of a stronger push. Yeah, I'd say about 7,000 is about average, like about normal, I'd say. Because before that, we didn't really have a reason to push above 7,000. So I'd say about 7,000 seems pretty good for ES if you do like to trade that. Gold, ever so slightly higher. And what's the one? Oil prices are still relatively elevated if you look at it in comparison to where we were prior to the war, right? You can see that the DXY has essentially almost pulled back all of the push. Same for like the euro as well, euro USD, right? This is the initial drop here on the second. So we didn't get those pullbacks. That's unfortunate. We had a very short-term pullback into here and then a nice push. Again, going to need something significant for it to push into that region. I don't think we're there now, to be fair, in terms of a reason. But like you can see, Euro USD has pretty much pulled back all of those legs. So yeah, oil is the only one that hasn't yet. So I think there would be a lot of downside to come when there's, we see the straight reopening and stuff like that. So that would be a good sign for oil prices to come in. So I think that would be a very good opportunity. So that would allow stuff like exporting EuroCAD to have a nice push, right? Even though it's pushed already, if you kind of compare it against oil, it is significantly undervalued, isn't it? Right? Oil is overvalued relative to where we are prior to the war, which is there. And then CAD has obviously weakened off, but it hasn't really followed those big oil prices. So if we do see those pushes, maybe that would allow EuroCAD to push even further up to the upside. So there's a bit of opportunity for us to look into. But yeah, I mean, apart from that, I've got not much else to add on to the dollar. I mean, like I said, it's going to be pretty quick today. So I think I'm going to breathe through the next couple of pairs because there's just been no updates really. So yeah, I mean, pound wise, very, very quickly. I mean, if we go into the filter and we just do the pound and the euro, you can see that, I mean, all we have really is Thursday's GDP prints from the UK. Sometimes it does move it, sometimes it doesn't. It really just depends on how much it moves away from the 3 month, is what people are concerned. Month of months does not matter too much, but the quarterly figures are always important. So that will give us a good idea on the quarterly. So that's what we want to be focusing on. If it's like point one or point, either side, higher or lower, it's not that big of a deal, to be honest. It's only when there's significant pushes is when people start to rethink. But for now, I mean, yeah, I doubt it's really going to be a market driver. So for us as people we want to be looking at, we'll keep this one open for now. Let me just open this up in a new tab. Yeah, you can see it powers the pre-war levels. I think it's the optimism, easing conflict in the Middle East with oil prices and support global economic growth. Iran and the US reportedly may revive talks following the start of the US blockade of the Strait of Hormuz. Basically, the US is blocking every single ship going in and out of the strait. Obviously, Iran uses that strait for themselves and not others. So what the US has basically done is blocked everything, which basically means blocking Iran ships as well. And that's essentially why it seems as if Iran has restarted these talks again. But the current FX market shows the dollar is flattering out. This means as long as markets feel the war in the Middle East is muddling in a messy fashion towards a conclusion, risk to global growth should be contained, which limits the demand for the safer haven dollar, which basically means a slightly more stronger GU, for example. The recent resilience of the pound, supported by a sharp move higher in UK yields, is also unlikely to last. We already see a scope for a catch-up in the pound weakness to better reflect the negative energy price shock hit in the UK economy. However, analysts at JPM warn of another interpretation, that the UK is still particularly exposed to higher prices and a slowing economy. Okay, we favor Euro GBP longs to position weaker fundamentals. Yeah, I mean, we were slightly bearish the pound prior to the war anyway. It's just that right now you do have to think a little bit more tactically rather than broad-based pound. So, for example, like GA, we're not really focused too much on, but like GCAD would be a good upside trade, which hasn't pulled back that deep. We've pulled back very shallow pullbacks, it seems right now. But like more top side for GCAD. Pound Swissy, I would probably be a little bit more long, given that there's de-escalation. GJ, obviously more long. GN, I'd rather go more long. To be fair, we did initially see, so what I would have done, right, is if we came into that, I probably would have went long. So what that would mean right now, I would be in a little bit of drawdown. So let's say we see that initial reaction here. We enter. Stop loss isn't going to be below this low, of course, because that is lower time frame technicals, isn't it? So we did speak about probably a little bit low below that low there. And then your targets are probably going to be either this high here, which is a 1 to 2, which is still pretty good, remember? Possibly sort of about almost a 1 to 3 targeting that high there. That's just a one trade, remember. It's not one of those ones where you're only going to be entering that, right? You could always get in on the pullbacks. But yeah, right now, I think this is the one that actually looks pretty good for upside. We judge it on price action. So basically what that would look on the lower time frame is a push into the low, minor breaker structure. It's not a full breaker structure because this low didn't close below this low. So therefore, that isn't a lower low. So therefore, that's not a lower high. That's from basic price action. However, this could be a start of a higher time, like a higher high here. And therefore, let's just focus on that. So basically, we pushed into that 1 hour demand zone there, and then a nice reaction. It's a little bit more of an aggressive push because obviously we didn't get that break of structure. But I'll be happy to do that because you don't really want to be losing out on some trade. So I think, Euro GN looks good for upside right now. Let's just see how this sort of 1 hour candle prints for us. We want to see how that prints. And then lastly, GU. Yeah, I mean, I would say about where we are now. Let me delete all this now because this is all old technicals. I'd say basically where we're at now is probably about right. Basically into this high 136, if anything, because we are going to need some sort of more positive updates in regards to the talks that's happening with the US. So if we do see that, then we probably will continue to push above 136. So we've obviously seen the talks rekindle again, which is obviously good news for like dollar downside. So that's all well and good. So if we see more news this weekend that is continued and it's got really good, then obviously we would like to push it above there. So what I'd want to see is how we react around here. We can pull back slightly. into these prior highs, then that would look good for some upside. I think that's about a 50% retracement from this little leg here. Yeah, about 50% seems pretty adequate. I don't like to very often buy when it's above 50%. So like, for example, sometimes you get like those 23% retracements. That's very aggressive, like short-term push, and then a very aggressive push after. I don't like trading those because it goes against sort of specific rules. So ideally, what I like to do, again, and you can go and back test this, is essentially try and buy between 50% and 86, because that's a good discount, right? We all love 50% off. And obviously above that or below that in this example, 61, 78% discounted essentially is very good, isn't it? So yeah, at least 50% is always what I like to see. But I can understand sometimes it does do those very short-term pullbacks. It might be the scenario we're in now because we haven't got that big reason to really pull back. So it might be very short-term pullbacks. But for now, I'll aim for about 50%. But we'll see from there. I think we can definitely, there's a lot of opportunity building now, as I'm sure you can see, right? We've got more peace talks happening. We've started to see, and a lot of those pairs that were selling off during the war have really pulled back now. So we don't want to be missing out on those trades for sure. So please just keep an eye on some of the pairs that you might be. If you're in, perfect. I mean, amazing. If you're not, just be very wary of where you're entering. Don't be overly aggressive. Like, for example, Euro USD is a perfect example, actually, where we know it probably will go higher on more further de-escalation, more better peace talks, but we don't want to be buying at the highs, right? We don't want to be doing that mistake. It's like buying Bitcoin or a stock at the high. You do want to wait for some sort of pullback before getting in. Whether or not it's a very shallow pullback like this, you want to at least see some sort of exhaustion before getting back in. So yeah, that's the trades I'm talking about, where you don't want to be making those silly mistakes. So yeah, for now, that is myself on the pound and the dollar. In regards to the euro, let me have a little think. Let's have a little, the euro, let me see. We do have Lagarde talking today, but she is speaking pretty much now, actually. So we'll see what she says. If we just quickly have a little look at the euro, right now, nothing's really happening. But obviously, we just need to see if she tells us new things. That's what people mostly only care about. But let's see what SocGen says. They're saying euro dollar looks to be on the march to 120. There is a very good chance now that if we do indeed see a fresh de-escalation of the conflict, and in particular the reopening of the Strait, Euro USD will break back above 120 in a wave of positive sentiment. I would agree with that too. Yeah, markets mostly only care if there's the straits reopened, right? Because that allows like oil prices to come in lower. So we did initially, remember, we initially saw, right? We initially saw when it first all sort of happened, where we saw that big sell-off in oil, and then we pull back slightly. So that's fair enough. And then we've obviously come in lower today. So what we want to be seeing, we did pull back mostly because of the blockage on oil, but because now there's some hope, some glimmer, I guess. Oil is coming in a bit lower. Euro USD is obviously going higher. So when we see some proper reopening, then markets are probably going to go back to being more bullish the euro than they already are at the moment. Oil, yeah, I guess would come lower. Naturally, you would expect it to come in lower. We might just push down towards these lows here and then eventually down here. But obviously, anything can change right on the way down there. So for now, if there's proper peace talks and so forth, and the strait is reopening, then yes, you would probably see oil come in a bit lower, which is obviously good news. So overall, I would sort of remain Euro USD longs. I don't know if there is like where are we going to get in from is the question, right? Because you can see how bullish it is. We don't want to be buying these highs. We do want to be waiting for some sort of pullback. Now, pricing for the 30th of April meeting is 10 basis points, and perhaps a lack of urgency in the ECB comments can now help investors align with a hold this month. But 2 hikes later this year are becoming very much entrenched into swaps. We feel that the clear progress in US-Iran is needed to sustainably take Euro USD above 118. So I'd agree with that. We need some proper guidance on what's happening there. Right now, sort of talks, but we want to be seeing things being written down and sort of moving forward, I guess. It does help make make the rise further in USD as all the more likely. So obviously that's kind of good news. We see most of the non-call. We've seen that already. Reflect the risk. Okay, so this one's not going too well at the moment. The issue with this war thing, right, is anything can change, right? So like they're saying to reflect the risk that the Middle East could escalate further. But the issue is if we haven't seen it escalate further, it's kind of died down and gotten a bit better, if anything. So I wouldn't be taking trades on hopes things happened. And that's what we spoke about before, right? Where it just doesn't really make sense to do that because it's just too risky. So therefore, what we want to be doing is seeing what things happen. Like, for example, positive things recently. So you probably want to remain bullish Euro USD until something happens, and then maybe you go back being bearish to Euro USD. But for now, because things positives are happening, you probably want to be like a bit more on the bullish side, if that makes sense. So yeah, I mean, I haven't really got much else to add on to that. Let me double check these guys over here. Not seeing much. Yeah, I mean, BofA is saying 120 by the end of the year, so that's kind of good news. Interesting though, they're saying dollar bulls for Q2, which is January, March, April, May, and June. So interesting, they see that. Persistently high energy prices present stagflationary impulses globally and US, Euro. Okay, cool. So they're just saying the convergence between the US and Euro area in terms of growth. Can it do that? Maybe, I guess so. But whether or not the markets are really going to jump onto that is the next question, because what we've seen is obviously when it all first started to get better yesterday, people jumped onto that. So we saw initially that gap lower, and then we saw it initially get better and better and better, and we've not really seen anything today. So it's continued to strengthen off. But people aren't really too much focused on that divergence right now. Possibly in the future, maybe, but right now, yeah, I wouldn't say so. I wouldn't say I'm bullish the dollar though for Q2. I'm also bullish it when the Iran situation tells me to be bullish. So Euro AUD, like we spoke about before, you can, I mean, if anything, it should probably go a little bit lower. Like we spoke about on Friday, maybe down to here, if anything there. But overall, it's not really, we want to be getting into pairs, right? Where we're not really like thinking it could go here, but it could also go there. So like, for example, Euro CAD is a good example where more so it's probably going to go higher than lower, right? I think most of the things tells us it's probably going to go higher. So therefore, we have a higher probability to be less stressed in that trade, shall we say. So yeah, Euro CAD, I mean, right now it's a tad bit on the wiki side, which is fine. But what we'd want to see, as we spoke about on Friday, is this break above the wick here. We see a break above the wick and then a pullback, a closure is important, and then pull back into an area of demand somewhere, and then we go long. Euro GBP is still a bit on the choppy side. I will personally leave it alone until otherwise. Euro yen, I guess, will probably continue to chop to the upside as well. I mean, it's starting to slow down in price action, but there's no real big reason for the yen to strengthen. Euro New Zealand, I would probably. This one's a bit tricky. I mean, what we were seeing was a bullishness sort of throughout March into April, but then what we saw was a slightly hawkish BNZ, which was this sell-off here. So it's something worth not fighting. So I would leave it alone. It may probably just chop a little bit to the downside, and then we'll hopefully see a bit more on the ECB front at that point. Euro USD, as we spoke about, probably about 118 where we're at now, and then we'll sort of see where we go from there. Yeah, I want to pull back though. I don't want to be buying the highs. But yeah, apart from that, that's myself and all three. We've obviously looked at all the other charts as well. That is myself. Let's move on to the AUD, the CAD, and of course the NZD. So the CAD and the NZD, very, very quickly for all three. Again, data-wise, if I quickly show us, where is it? This one over here. We see that, filter, AD, CAD, NZD. You can see that all we have really this week for all three is just employment change from Australia, which is obviously very, very important. What we want to be seeing here, though, is we want more higher time, like a higher time frame. We want more full-time than part-time. If that's primarily driven by part-time, then it's obviously not exactly the best of prints. So what we want to be seeing is more full-time than part-time. Unemployment rate is obviously very important. So ideally, we'd like it to stay the same or even come lower. So yeah, let's see what the Australian data does. But it's obviously doing pretty well because we've seen some decent de-escalation or start of some good de-escalations between Iran and the US. How long that continues? Hopefully a while. But for now, I think the AED probably does pretty well because we just think the opposite side, right? So if you're like if you want to be looking at a trades, right, or whatever, just think about the opposite side. So think about like, okay, I don't know, bullish the pound because of X, Y, and Z. Okay, but what is the opposite side? Like, what could be the reason why the pound comes in lower or the euro comes in lower? You have to just balance those reasons out and just have a little think, okay, which one's more likely to occur? And if there's something in the future that could be occurring, like I know in the UK, I think there's some political thing next month. So that could be a sign that as we get towards that, I think it's like some government meeting. Can't remember exactly what it was. I know I saw it on Bloomberg somewhere. That could be something where, we start to see a bit of choppiness in the pound, a little bit of potential selling, but doesn't change the overall bias until we see that meeting. And then we see, okay, this is not too much of a big deal in our opinion. Maybe let's continue to go back being long the pound, for example. So always just think about the opposite side and then just see which one's more likely. So for me, there we go. Cool. Yeah, as I was saying, for me, I think the AED should do pretty well. There's only some potential slowdowns as we're seeing here. Business confidence is falling. It's not the best of signs because again, if business confidence is falling, what do you think? Like, think of yourself as a business. So if you are a business, like a very large business, importing business, exporting, whatever, and you see that things are happening in the world right now, are you going to be more confident or less confident? If you're less confident, then what you're going to probably do is adjust your spending, adjust your investment, potentially pull on less people. If you're very confident in an economy, then you are going to be taking on more people because you know that a lot of people are going to help out, right? Whereas if you're not confident, you can see the opposite side to that. So obviously, it's not the best of signs, but what we want to be seeing is this bleed through into data. So if we start to see it bleed through into data, then the RBA will have to react to this, right? Maybe be a bit more dovish. The AED might struggle a little bit then. Then you think who is better off against the AED? Like maybe, I don't know, ECB might be more hawkish at that time. So you're AED long. So yeah, it's obviously not a good sign, but we want to be seeing it bleed through into data. So it's not like you're taking trades because business confidence is weak. It's more so thinking, okay, business confidence is weak, but is it showing in the data yet? We want to see it in the data first before we start to react to that. Because we don't want to preempt weaker data when, that weaker data could come 3-6 months down the line, right? And this is why analysts, I'm not saying analysts are bad, right? But there's a difference between trading and like analyzing. In terms of like being an economist, for example, like economists might say, oh, business confidence is poor, so we expect in so-and-so months to show in the data. Whilst that might be true, like in market terms, it's more not so thinking like, okay, now let's sell the AUD for the next 3 months. It's more so thinking, does the markets actually care about that? If they don't care about it, then markets aren't going to trade it. How do you know if they care about it? By looking at how the AUD has reacted. So we can see that, obviously against the dollar, it's higher, but against other people out there, AUD US NZD is higher, even though business confidence, which was this morning, was obviously not good, but it's not shown in AUD. So we know that markets don't care about it right now. Something to think about for the future, but just not right now. Hopefully that makes a bit of sense on how you look at sort of certain bits of data. So only focus on what the markets care about right now. And right now it's about Iran. So we only care about Iran till that starts to die down. Then we start to look at the data. That's kind of how we do it. But yeah, apart from that, not much else to add on to the AUD. I think what we've seen with Iran is pretty good for the AUD, to be fair to you. So AUD CAD higher, as we know. We've started to see some nice breaks now, so that's good news. AUD JPY, obviously higher. AN, higher in my opinion. And AU, AN's got to be a bit more choppy than like full out bullishness, like AU, for example, is full out bullishness, but AN, I think can go higher eventually. But yeah, apart from that, it's myself and the AUD. Very quick, very simple today. Similar to New Zealand, actually. I think New Zealand is actually surprising a lot of people, including myself. It has strengthened a decent amount, since that RBNZ meeting. How much I want to jump on board? I'm probably going to wait a little bit. I don't want to preemptively jump onto it. It just doesn't. Whilst markets have traded it, and we've seen that, as you can see, like a lot of this NZD strength, GN sells, it does allow the NZD to sort of bounce a little bit against certain pairs. So, for example, if you want to be trading NZD, NZD CAD is a good one. So you want to be long NZD CAD because that has more upside potential rather than like Euro New Zealand, if that makes sense, because Euro is seeing a bit of bullishness. So because New Zealand's seeing a bit of bullishness from the central bank, but euro is also seeing bullishness as well. Do you want to be trading that? Probably not, because there's no divergence. So what you want to be finding is, where is there divergence? So NZD USD longs, for example, is there's a divergence because the dollar is weak. NZD CAD, because the CAD is weak. Does that make sense? So always try and find divergences. Don't try and take trades where you're like, we're seeing this over here and things are happening over here, and maybe this allows a GA to come in lower, but there's also this potential. We don't want to be taking those trades because it's just too erratic, in my opinion. We want to be taking ones where we know right now it's pretty stable for that direction. We just think about in the future, is there anything that could derail that? If there's nothing in the near term, then you know you still want to be holding that trade, if that makes sense. Now, yeah, I mean, not apart from that, not got much else. I mean, data-wise, you can see nothing this week. RBNZ hasn't got a meeting anytime soon. Next week should be a bit important as well because we have inflation. So that'll be interesting to see how much of this inflation has impacted Canada, for example. If it's not as bad, like, for example, what we saw in the US, where it wasn't actually as bad as people were expecting, NZD CAD goes higher still. AUD CAD goes higher, if that makes sense. So that's what I'm looking at. And very, very, very quickly for Canada, data-wise, as you can see, is nothing. I mean, if I quickly show us over here, where is it? I don't think these guys spoke about it much. I'll just quickly show you what I'm looking at. You just zoom in. So for Canada, they say, we think the bar for the Bank of Canada to hike this year is quite high, which basically means it's not very likely. It can happen, but there needs to be like substantial reasons for it to happen, like data to come out that suggests a hike. If the Iran conflict escalates and oil prices remain above $100 a barrel for several weeks, the probability of hikes rises, but so does the probability of a global recession, which would increase the odds of a Bank of Canada ultimately has to cut. Basically saying weak Canadian dollar, in my opinion. I would interpret that as being weak CAD, in my opinion. So yeah, for now, I would be a bit more on the bearish front. But you have to always, okay, let's think about it this way. We are bearish the CAD, cool. But what's the reasons to go bullish the CAD? Let's ask us that question. What in the data tells us we have to go bullish the CAD? I can't see anything right now. Okay, cool. So nothing much in the data. Is there any externals like the war, as we know? Is there the only reason you would be oil? But CAD's not following oil. So even if oil prices are still quite high, the CAD is also quite weak. Whether or not it reconnects is just one of them ones where we just have to see. But for now, we don't want to be taking those trades where we have to see, right? We want to be taking ones where we see it, but then we know we want to be entering, right? So that's the trades for me right now, is short CAD until something tells us otherwise. Like, for example, Euro CAD longs, AUD CAD longs, G CAD longs, NZD CAD longs. The only ones you could see CAD strength on would be CAD JPY and dollar CAD. Apart from that, that's the only ones. That's the only ones I'll be looking at. So yeah, apart from that, well, not got much else to add on. I mean, let's quickly have a look at price action. Remember, not like right now, people are mostly focused on the war. So therefore, we are going to be focusing on that. So AUD CAD, yeah, I mean, we looked at this earlier. If we can pull back into actually this 12-hour demand zone, after we close here, that's important. We pull back here and then we go long. AD JPY, I'd still go long, to be fair to you. AD NZD, I am still going to go long. AU as well, probably going to wait for some sort of pullback like this 6-hour demand zone right here. G CAD Swiss, I am going to leave alone personally. CAD JPY is the only one where you could see some potential upside, but just compare it here, how much CAD JPY has moved versus AUD JPY and NZD JPY, right? So you want to be going where there's best value. I would say AUD JPY and NZD JPY longs has more value than CAD JPY, in my opinion. So for now, yeah, I think there's a decent amount of trades for us right now. NZD CAD, similarly here as well, right there. NZD JPY, I guess would be about there. And NZD USD would probably be about here is where I would only want to be looking at. Right now it's too high for us to even warrant trying to get in. So yeah, for now, that is myself and all three. Hopefully it makes a little bit of sense. Remember, you don't change your bias every single week, right? You only change it when things tells us to change it. So if we see like the war escalate again, like significantly escalate, that is, do you want to be like long the AUD in that environment? Probably not, right? It's not that you like are wrong in your direction. It's just that things have come out that's changed the direction, right? So as long as we start to see some decent de-escalation, some good news, further good news, The likes of AED should strengthen. The NZD should probably strengthen in the near term. The pound should do pretty well. The euro should do pretty well. CAD should do that poorly. USD should do poorly as well. So just follow those for now. And then if anything changes, that's when you change. But market's reaction would tell you a decent amount. So that is myself on all three of those. Let's move on to the yen and the Swiss. So the yen and the Swiss. So let's have a little look. Remember, if you have any questions, you're more than welcome to add me in the Discord, because I know obviously fundamentals can be quite complicated. So yeah, if you have any questions, please just at me, because it is a complicated subject. It's one of those ones where once you get your head around it, it does make a lot of sense. It's just getting to that point where you get your head around it. But it's like technicals as well, isn't it? Like we all started off and it was quite complicated. It was all very much like up in the air. And then eventually it started to make sense one day. So it's just one of those ones where you have to keep at it. And then one day it will be like, you wake up and you'll be like, this actually makes a lot of sense now. And then you just start to build on that. You start to build on your knowledge more. And it just makes your life a lot easier, shall we say. It's just getting to that point is the most difficult. A lot of people do fall off. I've seen a lot of people fall off when learning fundamentals because it is very difficult. But at the end of the day, the ones who don't give up tends to do the best, at least from what I've seen. So yeah, enough of that little rant there. Let's have a little look at the yen and the Swiss. Let me share my screen. This one over here. Perfect. So you can see that this week, all we really have is possibly PPI month over month. But apart from that, nothing much. We have Schlegel talking today. He is speaking at 6. He's obviously in DC right now. Maybe he says something, but right now, yeah, I'm not too much focused on either of those ones. I'm also focused on where is their value post-war. So when there's de-escalation, where's the best value to go? So we know that 8 has a lot of value right now. The euro has a decent amount of value. Pound has a decent amount of value. NZD as well has a decent amount of value for over the last week and a bit. So what we want to be focusing on then is, cool, the yen. Is there anything for us to go long the yen? I haven't seen much. I'll be honest with you. I haven't seen anything that screams to me that the yen needs to do pretty well. Not JPM, B of A. And let me double check. Let me scroll down. This is what they're saying here. When was this written though? That's the question. On the 10th of April. So that was on Friday last week. So I guess it's somewhat applicable still. They're saying beyond the near-term drivers. Oh, wrong one. Balance of payments. Higher oil prices have yet to bite. Higher oil impact still ahead, deficits to widen. So obviously that's not good for Japan, wide balance of trade or a trade deficit, because what you have to remember, right, is the ships that were sent out during the month of March, right, there has been no ships sent out. So the oil that we are seeing in terms of prices and supply are the ones that were sent out prior to the war, because it takes weeks to get to places, obviously, because they're traveling like 15 knots or something, which is very slow. So I think you actually ride a bike faster than that. Yeah, on knots and miles per hour, I'm trying to remember the conversion. Let me have a look. So let's say 15 knots to mph is about 17 miles an hour. So yeah, if you're riding decent amount of speed, like, you got to remember how big the ocean is, right? How big the world is. So it takes a good few weeks to get to places. So we're still, some of the ships are still arriving right now. So what we're thinking then is, okay, there's no ships then behind them that is going to arrive to help supply out. So prices should still remain very strong, in my opinion, in terms of pump. I remember, I think I drove past the pumped yesterday at Asda, which is Walmart for those who live in the US, and it was about 150p per litre. I know when I saw diesel, I have a petrol car, but in diesel, I think it was about 180, 190, which is pretty nuts. So the likelihood of those prices falling anytime soon is probably not there, because the ships that were sent after the war there have been no ships. So therefore, supply is going to be very restricted. What happens when supply is restricted? Prices rise. And that's what they mean by higher oil price impact is still ahead. Across the yen update, we favor AED/JPY. I would agree. Even if tensions around in Iran ease, normalization in oil prices could take some time. Commodities team projects the average Brent crude price in 2026 at around $92 a barrel. Prior to the war, we was at 65 to 67, which again is substantially lower than 90. So the likelihood of like like Japan doing quite well on a terms of trade is not great. And Japan is very, they do quite well in a decent terms of trade area, similar to the US as well. When they have a decent, I know the US has a good terms of trade right now, but yeah, for Japan, they're very, very sensitive to this. So therefore, we probably don't want to be going overly long Japan. What does that mean? We want to be looking at the crosses rather than dollar yen. We want to be looking at the other crosses like GJ, ADJPY, NZDJPY, Euro yen. Like these pairs still, I think, has a lot of decent amount of upside still. Just getting on the pullbacks is what we want to be saying, of course. So yeah, you can pause through this and read through this in your own time if you haven't been reading it already. But yeah, I would say still, I think the yen, I don't think there's a substantially big reason that is shouting in our faces to go long the yen, in my opinion. So therefore, we are going to be looking at AUDJPY longs. Yeah, Swiss franc, I'm leaving alone. I don't think there's much value in trading Swiss right now. Like Euro Swiss, I know some people like to look at it. It just there's not too much direction. If anything, I'd be slightly more long, but I don't trade Euro Swiss and I never have. I think I've only ever taken it once in my entire life. And that was a loss, by the way. So it's just not worth, like for me, it just doesn't gel. Like pound Swissy as well. You can see it is very choppy. It's just not worth trying to trade these choppy price action. It's probably best to trade the other pairs. There's much better value out there right now. Likewise for gold. If anything, I mean, I'm sure we can all agree, probably upside, right? So where are we going to get in from? I mean, we're obviously moving now, which is obviously good. So probably about here on this demand zone there. Very 1 hour-y. I don't really like trading it on the 1 hour too much unless you see a break of structure, obviously. So if anything, it'll be about that 4 hour then, which lines up roughly with the 1 hour as well. So both are correct in their thought process. What we want to see is a closure above this higher first. So this high needs to be broken. Right now, it possibly might do, but this needs to be broken because that did create the lower low there. Although it did gap, that's the only problem. I would still kind of, in a way, class it at a lower high. It's not a super strong lower high though, but it's still a lower high nonetheless. So if we get a push, a burn, a close there, we'd like a little pullback into that demand zone and then a nice push, given that Iran is still de-escalating. But apart from that, everybody, that is myself for today. Generally a bit quicker today because, again, if there's not much up there, I don't want to just long out for no reason. Friday, hopefully, we have a bit more to talk about because we have Australian data and a few speeches. But apart from that, everybody, that is myself. If you have anything, please at me in the Discord. But apart from that, have a good rest of your week. And I'll, of course, see you on Friday. Take care, everyone.